Hi everyone, before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2023 October-November Paper 3-1 question number 3. This is the structured paper 3 which consists of 3 questions. Each of them will be of 25 marks and the total time limit given for this paper is 1 hour and 30 minutes, which means that ideally you should be spending about 30 minutes in order to solve each question. And in this video as well, we'll be going to solve this question number 3 under 30 minutes. So without any further delay, let's get started. ZZ PLC has an accounting year end of 30 June. The following information was available for the year ended 30 June 2023. On 1st July 2022, the bank overdraft was 46,000 and there were 640,000 ordinary shares of $1 each in issue. First of all, let's have a look at the question. Okay, we need to prepare the statement of cash flows. So we have to process the information that we require in order to create this statement of cash flows. The very first thing that we have is the bank overdraft of 46,000 at the date of 1st July 2022. And we already know that our closing date is 30 June 2023. So this is the opening date, which means that this is our opening balance of our cash and cash equivalents. And this is a bank overdraft, which means that this is a negative balance. And there were 640,000 ordinary shares of $1 each in issue. This is our nominal rate. Then the non-current asset schedule was as follows. So from the non-current asset schedule, we can get information regarding the purchase and sale of non-current asset as well as the depreciation charge for the year. For our cost section, we have the initial cost at the opening date. Land and buildings, it was 500,000. Plant and machinery, we had 210,000. Then there's acquisitions. So acquisitions refers to purchase of any new non-current asset. In this case, we have acquisition of plant and machinery. So this is the purchase of plant and machinery. And this is the cost of purchasing it. And this will go towards our investing activities section. We then have disposals. And it's again of plant and machinery. This will go as the sales. But remember, this is not the sale proceeds. This is the cost of the disposed plant and machinery. Then we have revaluation. We can see that the revaluation amount is positive, which means that this is revaluation upwards for our land and buildings. Alright, then we have the cost at our closing date. For our depreciation section, we have our opening accumulated depreciation. For land and buildings, it's 27,000. For plant and machinery, it's 96,000. Then we have charge for the year. So this is the depreciation for the year, which we again need while preparing our statement of cash flows. We need to adjust this into our operating activities section. So the total depreciation charge for the year is of 33,000. Then we have eliminated on disposals. This is the accumulated depreciation of the disposed asset. And we already have the cost of the disposed asset. Let's figure out the net book value of the disposed plant and machinery. So this is just going to be cost minus our accumulated depreciation. The cost in this case is given to be 130,000. Then we have the accumulated depreciation of 52,000. This gives the net book value to be 78,000. And always remember, we need to calculate the net book value in order to figure out whether there was a profit or loss on disposal. Then we have eliminated on revaluation. Whenever there is revaluation upwards, we just completely delete the previous accumulated depreciation related to that non-current asset. And we can see that the opening accumulated depreciation was 27,000 and that is being eliminated upon revaluation. Then we have the total accumulated depreciation at our closing date and the carrying value at our closing date and the opening date. So these are just going to be the net book value of our assets. Then, the acquisition of plant and machinery, remember there was purchase of plant and machinery, had been entirely funded by an issue of ordinary shares at a premium of 0.25 per share, which took place in August 2022. So in August 2022, the company made an issue of ordinary shares, and whatever amount was raised by that issue was used in order to purchase this plant and machinery, which means that the purchase amount of plant and machinery will be equal to the proceeds from issue of ordinary shares. So our proceeds from issue of shares is just going to be equal to the purchase amount of our plant and machinery, which is of 200,000. And this will go towards our financing activities section. Then we have proceeds from disposal of plant and machinery, which was 91,000. This is the sales proceeds. Now, we already have the net book value of the disposed asset. We have the sales proceeds. We can calculate the profit or loss on disposal. In this case, we can see that our sales proceeds is greater than our net book value, which means that there is a profit on disposal. And this is just going to be sales proceeds of 91,000 minus our net book value of 78,000, which results in 13,000. Then other payables consisted of taxation and interest payable. Okay, for tax and interest, we are concerned with two different things. We are concerned with tax for the year and interest for the year that was allocated in our statement of profit or loss, that is required in order to calculate our profit from operations. Then we are also concerned with the actual amount of tax paid and the actual amount of interest paid, because we need to include those amounts as our cash outflows within the operating activities section. And since we are given ledger accounts for taxation payable and interest payable, this makes it very easy, because the amount under the heading of statement of profit or loss is going to be the tax for the year and interest for the year. So this is the tax for the year, this is the interest for the year, which goes towards our finance cost. Then the amount under the heading of bank is the actual amount paid. So the actual tax paid is 62,000 and the actual interest paid is 51,000. Okay. Then the inventory and trade receivables increased by 17,000 and 19,000 respectively. And always remember that increment in assets will result in cash outflow, which means that we have to subtract the 17,000 and 19,000 within our operating activities section. And we have trade payables, which decreased by 11,000. And decrement in trade payables will also result in cash outflow. So we have to subtract the 11,000 as well. Then we have a partial repayment of 20,000 was made on a long-term loan. So we repaid the loan, which means that cash will go out of the business. So this will again act as cash outflow, and we have to record this information within our financing activities section. Then we have profit for the year, which was 118,000. Remember, we already have the information regarding tax for the year and interest for the year. So we can easily calculate the profit from operations. Let's do that. Okay, so profit for the year is just the profit from operations minus finance charges minus tax, which means that our profit from operations is just the profit for the year plus finance charge plus tax. Our given profit for the year is 118,000. Then the finance charge is the interest for the year, which is 40,000 right here. Then we need to add the tax for the year as well, which is 52,000 given right there. This gives our profit from operations to be 210,000. Then during May 2023, a dividend of 0.08 per share was paid on all shares in issue. We also need to calculate the dividend paid, because that will be included as our cash outflow within the financing activities section. Let's calculate the dividend paid. And this dividend of 0.08 per share was paid on all shares in issue, which will include our initial given number of shares as well as the new issue of shares, because we are paying dividend at the date of May 2023 and this new issue was made at the date of August 2022. So at the time of dividend payment, there were also new shares. Let's calculate the number of new shares. And remember that this is the entire value of the new shares, right? And this value was at a premium of 0.25. We were given the nominal rate of 1. Then we have to add the premium of 0.25, which gives the total value per share to be 1.25. And in order to calculate the number of shares, we just have to divide the total value, that's 200,000, by its value of 1.25. This gives the number of new shares to be 160,000. Now we need to calculate the total number of shares. Previously, we had 640,000 ordinary shares. Now we have new issue of shares of 160,000, which gives the total number of shares to be of 800,000. So the dividend paid is just going to be the total number of ordinary shares multiplied by the rate per share of 0.08, which results in the value of 64,000. Okay, that's all for the information. Now we will prepare the statement of cash flows. And remember, this is for ZZ PLC. We're preparing statement of cash flows. And this is for the year ended 30 June 2023. We'll first start with our operating activities section. So cash flows from operating activities. And remember, the first item to be included in this section will be profit from operations. Okay. We have already calculated the profit from operations to be 210,000. Then next would be the adjustment for our non-cash expense, which is just the depreciation charge, and it was given within the information itself. The depreciation charge for the year was of 33,000, and while calculating our profit from operations, depreciation charge was subtracted. But this is a non-cash expense, which means that we do not have to include this. So in order to remove it, since previously it was subtracted, we now have to add it back. So that just will be a positive 33,000. Then another adjustment would be for profit or loss on disposal, since disposal of any asset will be recorded under our investing activities section. So we have to remove that aspect from our operating activities. And in this case, we calculated a profit on disposal. And we calculated it to be 13,000. And again, we're talking about removing it, right? Since profit on disposal was added while calculating the profit from operations, in order to remove it, we will now have to subtract it. So we will be subtracting the 13,000. Okay, now we have made adjustment for our non-cash expenses as well as adjustment on any disposal values. So we can move towards including the increment and decrement in our current assets and current liabilities. In this case, we were given the increment values for inventory and trade receivables and the decrement for trade payables. That was of 17,000, 19,000 and 11,000. And we have already concluded that all of these will result in cash outflow, so we need to subtract all three amounts. So the first one was increment in inventory, was of 17,000. Then we have increment in trade receivables, it was of 19,000. Then we have the decrement in trade payables. That was of 11,000. Okay, now the next step would be to calculate the cash from operations. That is just going to be the sum of these amounts. That will be 210,000 plus 33,000 minus 13,000 minus 17,000 minus 19,000 minus 11,000, which results in 183,000. Now we need to include the interest paid and tax paid. And this information was also given above. We can see that the actual amount paid for tax was 62,000 and the actual amount paid for interest was 51,000. And both of these will be our cash outflow, which means that we will be subtracting these amounts. So for our interest paid, it was 51,000. For our tax paid, it was 62,000. Now we can easily calculate our net cash flow from operating activities. And that's going to be 183,000 minus 51,000 minus 62,000, which results in 70,000. Now we can move towards the second section, which is cash flows from investing activities. And this section deals with all of the purchases and sale of non-current assets. In this case, we had purchases of plant and machinery at the value of 200,000, and in order to make this purchase, the company would have to pay out 200,000. So this will act as the cash outflow, which we will be subtracting. And then there was the sale of plant and machinery as well. For sales, the company received 91,000. That's the sales proceeds, right? And since this is a receipt, we need to include this as our cash inflow. That will be all for the investing activities section. So we first have purchases of plant and machinery, of 200,000. Then we have sale of plant and machinery, where the sales proceeds was of 91,000. That will be all for our investing activities section. So we can now figure out the net cash flow from investing activities. That will be negative 200,000 plus 91,000, which results in negative 109,000. Now we can move towards the third section, which is cash flow from financing activities. This section will include new issue of shares and the proceeds from those issue of shares. It will also include the dividends paid as well as the new loan acquired or the loan repaid. The very first thing that we can write down is the proceeds from new issue of shares. And we were told that the proceeds of shares were utilized in order to fund the purchase of plant and machinery. So the amount will be the same, that's 200,000. And since this is the proceeds, we will be actually receiving it from the shareholders. So this will act as our cash inflow. Then we calculated the dividend paid. This will be a cash outflow. So we will have to subtract the 64,000. Then we were also given information regarding partial repayment. So partial repayment of 20,000 was made on a long-term loan. We already concluded that this will act as a cash outflow, so we'll be subtracting this amount. This is the repayment of loan of 20,000. That will be all for this section. So we can now calculate the net cash flow from financing activities. That will be 200,000 minus 64,000 minus 20,000, which results in 116,000. Okay, now we need to see whether there was a net increase or decrease in cash and cash equivalents by adding these three values. So that's 70,000 minus 109,000 plus 116,000, which results in the positive amount of 77,000. Since this is positive, we can term it as net increase in cash and cash equivalents. The next thing we need to do is add the opening balance of cash and cash equivalents to this value. In order to get the closing balance of cash and cash equivalents. And we were given information regarding the opening balance. We were told that there was a bank overdraft of 46,000. So this will be a negative value. So we have to subtract the 46,000 from our net increase in order to get the closing value. That will be 77,000 minus 46,000, which results in 31,000. That is all for our statement of cash flows. And for the second part, we now need to discuss how shareholders are likely to view the changes in the company's capital employed. Capital employed will include our equity and non-current liabilities, which would have taken place during the year. The calculations are not required. We only have to discuss the implications of these changes for shareholders, and your answer should consider separately each element of capital employed. This is of 8 marks, so we can consider 4 elements. Okay, so the very first element that will be affected within our capital employed will be our share capital and premium, since there was new issue of shares. So let us consider how shareholders will view this change in share capital and premium. Remember that this new issue was not a rights issue. This was a new issue of shares. So definitely the first thing that we can say is that the capital raised by the share issue can be used in order to increase the revenue generating ability of the business. But since the control is diluted by this new issue of shares, and the implications for shareholders is that this is a new issue of shares, so the control of the business will be diluted. Let's write it down. The capital raised by the new issue of shares can be used to increase the revenue generating ability of the business And remember, shareholders will always be concerned with the revenue generating ability, since they will get dividends out of the profit, right? So higher the revenue, higher the profit, higher the dividend. But there will be dilution of control. That's all for the first element. And second element is the repayment of loan. So by repaying the loan, we are basically decreasing our non-current liabilities. Let's consider that. Okay, so the first thing that we can write down is that loan repayment will decrease the amount of interest payable, right? So that's a good thing because the profit will be higher, and we can see that which will result in increased profits. Let's write it down. The repayment will decrease the amount of interest payable which will increase future profits. Okay. Then we also made payment of dividends, and that will reduce our retained earnings, which is part of equity, so we can consider this as well. Okay, so the dividend paid was of 64,000, and we can compare this to our profit. The profit for the year was 118,000. So the first thing that we can say is that the profit for the year is higher than the dividend paid, which means that the dividend could have been higher, right? The shareholders will always want higher return. And the next observation is that some of the profit has been retained by the company, right? So that can also be considered as profit being plowed back into the business. Let's write it down. So the profit for the year is higher than the dividend paid, which means that the dividend could have been higher. Okay. Now the remaining element of our capital employed is the general reserve and our evaluation reserve. No information was given for general reserve, but I think there was evaluation upwards. Yeah, right here. So this will increase our evaluation reserve. We can consider that as well. Okay. So the revaluation reserve revalued the non-current assets upwards. It will not really increase the revenue generating ability of the business. So this will not affect the shareholders. Let's write it down. The revaluation upwards does not increase the revenue generating ability of the business, and therefore will not affect the shareholders. Okay. We've considered 4 different elements of capital employed. That is all for the second part as well as this entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure that you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.